Holy smokes, China is just going to the HE double hockey sticks, and it has at least some effect on Tesla, with Tesla dropping their prices across the board by 5% on their vehicles, and boy oh boy, Tesla stock is not happy. Now, maybe it's coming under the pressure of Elon Musk selling, but boy oh boy, there is some pain happening in China. And we've got to broadly understand China. So let's go into what's happening in China, and then we'll talk a little bit about autos like Tesla and NIO. Well, China is facing what is likely a dirty Great Depression and potentially a lost decade, and it's taking Tesla down with it. Well, and not just Tesla, because according to markets, the Chinese government ain't helping almost any company. That's because China's once every 5-year party congress just ended and dashed hopes that markets had been waiting for. See, China is facing a multitude of disasters. Number one, their property market has been facing a deflating of the massive debt-driven speculative bubble that propped up the housing market to create thousands, if not tens of thousands of homes, to create homes in a build-it-they-will-come mentality, with governments subsidizing home builders to just build as many homes and properties as possible. Of course, taking on more debt to finance exactly that. Unfortunately, when taking on new debt became impossible via China's new 3 red line policy back in 2021, Chinese developers started defaulting. And that meant no more building, which meant thousands of unfortunate Chinese were left holding the bag of unfinished homes in China. And this is crimping their economy, with retail sales just coming in disastrously below expectations. Though GDP coming in slightly above, driven by other factors, the individuals in China are getting reamed. And unfortunately, their party congress did little to help them this week. The second issue that many are facing is China's COVID-0 lockdown. So this is a policy of shutting down schools, restaurants, and really streets in a very eerie and Brave New World style method, where Chinese law enforcement will go as far as sending robot dogs and drones around city blocks and right outside of apartment windows, announcing lockdowns and forcing people inside, all to the demise of course, retail spending and the ability of the country to manufacture, or really any motivation for Chinese individuals to actually spend money. In fact, since January, Chinese individuals have been saving 4 times more money than they had in the prior January, and it's no surprise because the Chinese are seeing that what their government is doing is pushing them, unfortunately, into a depressionary environment. Not just through that 37% decline in real estate prices, that 13 months in a row now of real estate pain with property developers defaulting, but really also because of COVID-0 and, number 3, tensions between China and the West, including America and Taiwanese relations, leading to the recent ban of the sale of any advanced chips to China from any company so much as using American equipment or American software to manufacture chips. A big blow to not only China militarily, but also to their goals of developing the world's strongest artificial intelligence and their goals of expanding their economy. This is a blow, especially with companies like AMD and Nvidia selling over 20 or receiving over 25% of their revenue from China. Well, Wall Street believed at the very least that the Chinese Party Congress would at the least, lay the foundation for a strong next 5 years. That's because these congresses happen every 5 years. And the themes that we thought we would hear about would be things like a relaxation of COVID-0 policies, strong policy support for housing, talk about reducing poverty, a goal of common prosperity, and a goal of peaceful reunification with Taiwan. And again, most importantly, that relaxation of COVID-0. But folks, when Party Congress ended on Saturday, we didn't get that. Now, I'll talk to you about what actually happened at the Party Congress, and I'll talk to you about Tesla and NIO. We'll look at some of their numbers as well and what's going on. But first, a message from our sponsor. You know, some of you might not know, but I'm not a landlord anymore. And I'm a little disappointed about this because, I sold 85% of my properties, all the ones with tenants in it, and I'm not a landlord anymore. So now when people are like, but hey, Kevin, the New York Times has you featured as a landlord influencer, but you're not actually a landlord, like, what happened? I thought you were the landlord to go to with questions about landlording online. And I have to say, I was so disappointed. I thought, you know what? Maybe there's a way I can become a landlord again. And so what we did is we got ourselves 1 square foot of land in Scotland. And now we're technically lords of the land again. We have 1 square foot of dedicated land on a private estate in Scotland. We have an official certificate to go with it. And I'll show you that certificate, and I'm gonna take you into the special spot where my certificate is. See, my certificate features a unique plot number, so that way I can always geolocate my exact location. And the company that plots these plots and sells these plots plants a tree with every single order. So if you want to be a landlord, consider using the link down below, and you can officially change your name to Lord or Lady. Like on your plane tickets and credit cards. There's some things you can't put it on, like passports and driver's license, sadly. But I'm officially a lord again. So you can now go to establishedtitles.com/meetkevin to get your last minute gift for someone else. You get 10% off when you use the Meet Kevin coupon code, or you go to establishedtitles.com/meetkevin. What's really cool is Established Titles is running a large sale right now that's unique to this moment in time. So make sure you use that code MEETKEVIN to take advantage of that sale. And quite frankly, it's kind of cool to officially say I'm a landlord again. By the way, Established Titles told me the first 200 people purchasing a title pack using my link down below will effectively be next to my plot within a few minutes of walking. Depending on how many of you want to become a lord or lady, we can build our own little channel named Kingdom 93. Let me show you the certificate. Here it is, my certificate in my new podcast set. Don't tell anyone yet, but we are gonna hang this up so that way I'm officially a landlord in my podcast set. Let's go. So what happened in China, and what about NIO and Tesla? We got a large consolidation of power by President Xi Jinping and his loyalists. We got a show of Hu Jintao, the former president, being escorted out of the party congress, a sign that Xi Jinping is now in full control and that nobody should question Xi Jinping's control. And quite frankly, it's not the control markets wanted. We also got zero indication that COVID-0 policies would be loosened, something that analysts across Wall Street had all been expecting, that we would get through this next winter and then we would start seeing some softening of COVID-0 policies and an eventual removal of them. However, China instead applauded their COVID-0 policies, and if anything, doubled down on keeping them, showing how useful and effective they have been at preventing COVID spread. And this has driven the idea that that's it. China really doesn't care about anything other than state-driven enterprise. Private enterprise does not matter in China. So what's happening? Well, there's the highest level of selling of Chinese stocks happening right now since 2016. Companies like Baidu, JD, and Alibaba all shaving over 10%. The Hong Kong Tech Index is now down 50% for the year. Individually, stocks like JD.com are down 17% at the very moment. And reality is, even though GDP came in slightly stronger than expected for China, many doubt the numbers. I mean, quite frankly, why wouldn't you doubt the numbers? I mean, look at the Q2 earnings report from Tesla. Okay, this is the second quarter one, not the one that we just had, but the one before that. So this is over 3 months ago we got this particular report here. And Tesla gave us a heads up. They told us that they're having demand destruction in China and that they're having to competitively price their vehicles in China. After this report, they started doing insurance subsidies. Now they're reducing their prices in China. China is having a painful environment. But it's not just Tesla that's suffering. It's also companies like NIO that are suffering right now. This morning, we went through the NIO earnings and earnings call with course members, and we've seen a faltering of growth rates as NIO is trying to ramp their factory number 2 to create the ET5, actually exclusively in that factory. Now we expect explosive growth to come from NIO in the fourth quarter, just like we expect explosive growth to come from Tesla in the fourth quarter. But both of these are companies that have been ramping factories during a very hellish inflationary time to ramp factories. Factory 2 for NIO and Berlin and Austin for Tesla. The only difference is between the two is Tesla has still been producing vehicles at a 50% run rate, whereas when you actually look at NIO, they haven't been. They've actually seen their growth kind of stagnate, kind of like this chart that I've drawn here, and you could see that in their quarterly numbers in their last earnings report. And so NIO not having as much growth success as obviously Tesla, but both of these companies getting absolutely hammered on Chinese demand and what's happening in China. NIO, right now, NIO ADRs are trading down 22%. And in order for you to say, it's time for me to buy the dip on NIO, you really have to ask yourself, A, do you believe in the Chinese government? Do you actually want to invest in the Chinese government? Do you believe that the Chinese consumer is going to go back to spending even though they know their economy is in shambles and they're saving like crazy? And do you believe that NIO is actually going to successfully be able to ramp that factory number 2 to the point we actually get to some strong growth rates? I mean, maybe, but right now the company's still losing money. We're still not at levels where Tesla is. Now, that's okay because NIO is a newer company, right? Tesla has over 39,000 supercharging stations, things you can plug into. NIO has like 1,100 battery swap stations, and when it comes to regular charging stations, a fraction of what Tesla has. It's a much newer company, so it's not fair to line them up par to par, but Tesla didn't have this sort of 2022 stall in growth that NIO had. And that stall is leading to a lot of questions that will that ET5 be able to bring back their exponential growth or not? Things to pay attention to. And I hate to say it, but Chinese government ain't here to help. Let's just say markets did not get what they were looking for here. And remember, this is a country that started 52,000 infrastructure projects since January of 2022, and their production numbers are still negative year over year. So you can't really blame Tesla for cutting prices in their cars in China by on average 5% across the board, because what you have is ugly in China. You have an economy that's faltering, you have growth that's stalling, probably quite frankly in a recession, and you have a government that is now emboldened to keep its economy in a recession. But hey, some say there could be some good news in all of this. Maybe not necessarily investing in Chinese stocks, but China could end up being an anchor for global inflation. That is, as China's economy stalls, it could sink the global inflation countries across the world are dealing with the exception, of course, of China. It's actually actively trying to stimulate their economy because they're already so far in the rut. Other than that, though, it seems quite risky to invest in China right now as a foreign investor, as the country doubles down on COVID-0 and doubles down on state-run businesses over private enterprise. And now the fears of a lost decade in China are truly coming together. Let me know your thoughts in the comments down below. Are you investing in Chinese stocks at the moment? Or are you taking your losses in Tesla instead?